Folks, you better get ready. In today's video, we're going to break down the latest on the market and plays. And then we need to break down one specific stock that I believe has 597% upside from current pricing, is in the middle of the chip and AI boom, and is currently heating up very, very nicely. You're not going to want to miss this one, folks. I'm going to lay out my case for it in an extremely detailed fashion and let you be the judge. Of course, I've been wrong before, so make sure you're always doing your own due diligence. If you're the one taking the ultimate risk, you got to be the one doing the ultimate frisk. And the only thing I ask in return for all of the work that goes into making a video like this is that you hit that like button, and also don't forget to subscribe. When you do those things, YouTube pushes this video out to more folks and it helps us out tremendously. Okay, let's start with the market. So what a roller coaster. One day we are heading into World War III, the next day it's canceled, the next day it's back, the next day everything is fine. But in roller coaster volatility comes roller coaster opportunity, and as Spider-Man once said, in great volatility comes great responsibility. Now, folks, in these times, it is so important to make sure that you have a clear strategy and plan of attack. This is the ZipTrader strategy in a nutshell. The main focus is always buying good assets at good prices, which means buying dips and high conviction stocks. Holding. But selling and or trimming when the value you projected is realized, and continuing to hold if the company continues earning your conviction. We don't just blindly hold something. We don't get married to stocks and endlessly hold them forever if they no longer deserve our conviction. Now, the secondary focuses that come second to that main mission of buy and holding conviction stocks are momentum riding and option strategies. Now, with momentum riding, that means buying momentum stocks with rapid business model growth, riding that momentum, setting stop losses for 15 to 20% down, depending on your risk tolerance, and most importantly, locking in profits and or cutting losses quickly when you're wrong. And then for the option strategy, which is another secondary focus, but a very, very powerful one, well, that involves accelerating momentum by buying calls on high conviction stocks. Occasionally, that could mean buying puts if you think something is very, very overvalued and or you've lost your own conviction in it. And of course, there's also the inevitability of hedging for downturns and or geopolitical events. Options give you a lot of ways to profit off both the ups and the downs, as well as the sideways. And thus, it's very, very useful for an overall strategy. Now, the overall goal of these three focuses is to sustainably grow long-term portfolios by strategically reinvesting and compounding profits from solid price appreciation, strategic momentum trades, and options strategies. Now, if this strategy sounds like something that's interesting to you, we have a whole Discord community down below where we post everything supporting this strategy. And the reason that I'm bringing this up is because I know so many folks on social media will post things and it sounds like they're gambling. They're going and they have no clear strategy. They're just buying whatever looks pretty. And that kind of gambling, folks, is a pathway to destruction, and we don't want any destruction. Randomly gambling in the stock market is like going to the gym and not having a plan of what workout you're going to do, and randomly choosing machines to do, screwing up the technique, and then binging on sugary, overpriced protein bars afterwards, and then wondering why you're not making any results. Now, I know that personally because I tried it. It doesn't work. It doesn't help you get in shape. So don't do that when it comes to the stock market. Make sure that you have a clear strategy. Okay, with that being said, let's go ahead and get to plays. And I want to start with a wrong prediction, something that I got wrong. Now, as I always say, I'm a big believer and preacher of long-term holding good assets at good prices and buying dips, but I'm also a big believer in hedging as an insurance policy and counterbalance during storms. And I came out hard, as you know, for hedging this Middle East conflict with the UCO oil play and the UVXY volatility play. And those got hammered, obliterated. Then the conflict abruptly turned into a tentative ceasefire, way before expected, which was a very, very good thing for the world, but a bad thing for hedging plays and oil specifically. According to Bloomberg, the Trump team was apparently themselves expecting a major oil supply disruption, and thus were actively weighing a range of options to deal with this. So what is the takeaway here when it comes down to hedging? Does it make sense to do it? Does it not make sense? What is the takeaway, Charlie? Hedging, like we've been talking about, is an insurance policy that can help you a lot when the storm comes, but is going to cost you if there's no storm. The war could have easily escalated for a few more days or weeks, and it could still easily escalate, which is why I'm such a big believer in hedging if you can't 100% predict the future. We always do our best to try to prepare for all outcomes, right? And in this case, my base case scenario didn't play out. But nonetheless, that doesn't mean that hedging isn't an effective tool for you. Okay, let's talk hood. So our hood play hit a new high today. This is a Discord portfolio play and one we've hammered on so many times on the channel this year. And the thing with hood is they figured out so many ways to market products to their massive ecosystem of financial clientele. They are the leader of this next generation of finance, and it's showing. Now, the reason that they're really starting to take off, though, is because a prominent insider just bought $2 million worth of hood stock at near these all-time highs, which is a big show of confidence, right? That said, this is a high beta stock, which means lots of volatility, so be warned that sell-offs, just like movements upward, can go 20 to 30% or more. A lot of people say, Charlie, I love these stocks, they go up 30, 40%, but then when they see that that same stock can go down in a day 30 to 40%, if not more, they're like, oh, I don't like that anymore. But that's the whole game with these types of stocks. You have higher potential risk, but higher reward. And if you're picking the right plays, that means more aggressive dips and more aggressive rips. Okay, next, Tesla. So we came out for the rebound narrative ahead of the launch of the robo-taxi, and the launch helped the stock quite a lot, and it is helping shift the narrative away from the whole Elon versus Trump saga. Now, we alerted 340 strike Tesla calls yesterday in the pre-market to benefit from the launch, and those went from about $39 to $60 at highs and then sold off in today's sessions as markets took profits. Now, here's the thing. You're going to see continued rolling pumps and then massive rolling dumps on Tesla stock because that's the news cycle that we're in right now. The robo-taxi launch is already getting dragged down by bad headlines, and there's a lot of folks in the media that hate Tesla, and they're going to hammer Tesla on every single mistake that the cars make and blow it up to be as big as possible. Now, I'm sure that these cars are making mistakes. I saw some videos, it looks pretty legit. There are issues with the launch, but it is a brand new launch, so it's to be expected. I just think you're going to see media play this out of proportion and try to say that all the competitors are a million times better, when in fact, when you think about how much of a fleet Tesla has and their production capacity, well, nothing comes close. Once Tesla hammers out these robo-taxi flaws, I think you're going to see them really start beating out Waymo and a lot of the other competitors. Now, I think a lot of people are sleeping on Elon Musk, but look, he's out of the political spotlight right now. Hopefully he doesn't return. I think him being back at Tesla and focused on his broader missions is very good for Tesla stock, and I think markets will reflect that. And that is the bigger picture reason why we alerted Tesla calls. Okay, now it's time for the main entree, AMD. Now, AMD is one of our most consistently performing high conviction stocks right now, but it's got way further to go, and I'm going to make the case for that today. So why is AMD screaming buy? Why Charlie Toe? For the context here, I mean, this stock has long been considered the number two to NVIDIA. People thought of it as the slightly shittier but cheaper and faster to attain supplier. And in many cases, there is so much demand in this industry that a lot of companies just simply wanted the cheaper and faster alternative. Why pay a lot more and wait for NVIDIA when you can get AMD a lot faster and cheaper? Sure, AMD's chips were a little bit shittier, but they didn't have the same time constraint, and it was still top tier. And that was kind of AMD's whole value proposition the last couple of years. And they were doing well from that, but nothing crazy. But now the whole game is changing. From the street, quote, after months of lagging behind NVIDIA in the AI chip race, advanced micro devices may finally be turning a corner. The AI chip maker stock had tumbled earlier this year on concerns about trading uncertainties and its competitive footing. Now, with news on the company's advanced chips and the markets warming up, Wall Street is starting to reconsider AMD's long-term potential in the booming AI space. On June 12th, the company held a developer conference in San Jose, California, called Advancing AI, to discuss its MI350 series and MI400 series AI chips that would compete with NVIDIA's Blackwell. AMD's CEO Lisa Su said the MI350 series is faster than NVIDIA's, Bloomberg reported. Look, MI350 series faster than NVIDIA's. Su previously predicted $500 billion in AI accelerators market revenue by 2028, but she now sees it topping that number. People used to think that $500 billion was a very large number, she said. Now it seems well within grasp. Now, we've been bullish on AMD for years, and it is a Discord portfolio play. But after digging into all of this new data that we have and these new projections from the company and some third-party analysis, I've started reassessing my view on this. My long-term thesis is that in the bullish case scenario, well, by 2030, we see data center revenue hitting $85 billion, PC and gaming hitting $50 billion, embedded and enterprise revenue hitting $30 billion, custom semiconductors hitting $28 billion, and total revenue being just shy of $200 billion, leaving us with a market cap of $1.54 trillion and an implied stock price at $958 in 2030. That gets us to about half of NVIDIA's current present day, today, market cap, and still gives us about a 6x plus, almost a 7x in a few short years, right? This is a good example of a good asset at a good price, and one that is currently seeing very beautiful momentum. You look at the rundown here, very impressive stats. They've had robust revenue growth. AMD delivered $7.44 billion in Q1 of 2025, a strong 36% increase year over year, driven by very beautiful data center and client segment strength. They've had absolutely explosive data center growth. I mean, data center revenue surged 57% year over year to $3.7 billion, showcasing AMD's successful pivot beyond customer PCs, AI accelerator leadership, new Instinct MI350 GPUs, and upcoming MI400, MI500 chips position AMD to seriously challenge NVIDIA's dominance in AI hardware. You don't have to read very much online to really dig into the impressiveness of these chips. Now, rack scale system adoption, AMD systems are now deployed by 7 of the top 10 AI firms, including Microsoft, Meta, OpenAI, and Oracle. Now, they also have a cost efficiency edge, which AMD has always specialized in that. Cost efficiency has always been their strong suit, and AMD's MI355X GPUs reportedly deliver up to 40% more tokens per dollar compared to NVIDIA's flagship B200 GPUs, offering absolutely unmatched value. They're also very, very shareholder friendly and conscious of shareholder value. AMD recently authorized a fresh $6 billion share buyback, supplementing a previous $10 billion program, signaling strong internal confidence and enhancing shareholder returns. The analysts are coming running for this stock. They love it. The company has excellent leadership. Lisa Su is blowing everybody's expectations out of the park. And I mean, you just look at AMD's own numbers. AMD forecasts the AI data center accelerator market will surpass $500 billion by 2028, implying some 60%, if my math is correct, some 60% annual growth. Yep, that's right. Giving AMD immense runway for sustained expansion. So how do you play this? Well, this, in my opinion, is a buy, and hold over time type of play. But I'm also a big believer on playing options on this current momentum. And on June 18th, we alerted these $140 strike calls expiring August 15th, 2025. We alerted those in the Discord, and they opened at roughly $4.74 that morning and ran to $9.45 at highs this morning as AMD stock moves towards that $140 strike price. And I continue to see upside for those, but as we break through higher and higher resistance levels, you may want to extend out the strike price and the expiration date. Anyways, folks, that caps off today's video. Let us know what your favorite plays are down below. We appreciate each and every single one of you, and we'll see you in the next one.